Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Night video for August the 7th, 2018. And we're talking markets overextended, above some trend lines, and just shy of all-time highs. We'll be focusing on that and the plan for the rest of the week and into next week. Looking at this is our S&P futures chart. The market is overextended. This is our dominant thesis trend line, and it's taking us above 2850. Now that's just shy of the all-time high of 2875. And we're above that. Last time we poked above it, we have two examples really, of the market extending above the trend line and then retracing back under it. We're going above the trend line and then falling back, but this time we're back at the highs. So we are looking for this repeat pattern of this overextended, almost rising parallel trend line channel, and we did not get our pullback. So here we are. And as we go forward throughout this week, we have to balance the probabilities and what should happen or the expected plays with what's actually happening. First, let's take a look at price levels. Then we'll take a look at volume and internals to plan what we're going to be looking to do for this week and beyond. First, we are above 2850. And we're shy of 2875. It sure does feel like that market wants to go all the way up there and hit that prior high. Now, this is one of those situations where you don't want to play for small gains with the risk of a market sell-off or a sell swing. So that's what we're going to be balancing odds for the rest of this week and into next. 20 some odd more points, sometimes even 15 points to the upside, versus a sell-off risk of 60 or more points. Taking a look at the SPX, our S&P index, we can see that the key levels are 2872 of the prior high, and this one is actually just a little bit shy of the trend line. It's actually pushing up into it. That's 2865, shy of 2870. Again, price can ride trend lines, but the risk is high and the probability is greater for a sell-off. So even though we might not want to get short tonight or tomorrow, the odds are beginning to tip in the bear's favor. So it's a little late to get super bullish, even if the market can push up 20 or some odd more points. With the Dow mini futures, we can see the market is not quite at those all-time highs. Our pivot point is just shy of 25.7 and shy of 26,000 for the Dow futures. And that is, again, beneath its pivots. We don't quite have the same level of trend lines, but we're going to be watching this 25,500 spot, and above that, 25.7, 25.8. Again, maybe a little bit higher push, but the odds are shifting towards the downside. If we extend this very short-term trend line, we can see that same level of planning. Maybe some additional action into Wednesday, but the risk is shifting toward the downside. In the Nasdaq, it has been the strongest of our indexes, but it is just shy of its 7530, or just 7500 level. So that is playing into today's session. Again, possibility for slight upside play, but the risk is growing for a sell-off, just like this, sell swing. Right? Markets can tip a little bit higher. Markets can do bull traps and breakouts that fail, and that leads to a rapid sell swing. We typically like to buy pullbacks, especially swing trading, or try to get positions on with options on the pullbacks. But those fade traders, if you like to short overextended markets away from moving averages, away from trend lines, we're getting into one of those spots with respect to the prior highs and our rising trend line patterns. The Russell index, this is Russell futures, is also just shy of its 1715 high. It is forming a triangle sideways trading range near 1700. The midpoint's about 1685, 1686. So that's our play with the Russell. Again, we can see additional potential for upside action against our resistance plays. So we're not going to just rush up here and throw our whole account short, but we will be expecting a defensive posture, defensive play into the future. Another reason for that would be our volume. Now, volume tends to go with price. In a rising market, we typically want to see volume increase. If that's the case, we expect additional bullish price action. And we're okay with swing trades long, selling premium, and everything else with bullish opportunities. But not this right here. Zooming into our most recent upswing, 4 days in a row up, each day was met with lower and lower and lower volume. That is a warning sign. That is a caution. We can see that play out in other examples before small pullbacks took place. So take a look at the prior swings in the channel and what volume was doing. The same is true in our Dow futures, really all the markets. 4 days up, 4 days of volume down. That is giving us pause if we're bulls. That is a caution warning sign that we should be getting ready to play a downswing, protect ourselves, hedge against these resistance pivots with reduction in volume. And finishing up with the Russell, again, same pattern with our decline in volume as price pushes higher. So what might be downside targets? I continue to reference this rising trend line pattern, and we did not get a sell swing here. Little alternate thesis surprise bullish bounce off the 2800 level, and that resulted in a larger than expected bull rally. Short squeeze, stop losses of the bears took us to these new swing highs. Watch this 2850. That could be your short sell trigger, and to put on bearish strategies beneath 2850, playing for at least 2800. That would be very logical, but probably into the future 2775 as this rising trend line continues to increase in value over time. It can be helpful to project out price and create these trend lines further into the future. And one way we do that is with our probability of expiring cone. So taking a look at the ES, similar play, similar metric, just extend out your trend lines, how you draw them on your chart. And that way you can see potential turning points. If the market does trade down, when might it hit these levels? And what might the probability of our option chains say? But for now, we're going to be cautious into these spots, cautious into 2860, 2875, all these pivots here. And if the market does start to turn lower, we'll know to put on bearish strategies, buy those puts, sell those calls, trade the verticals, or just trade on the lower time frames on a swing down away from these pivots, down toward first 2800. And then if that fails, just like the other times in 2018, down toward our lower trend line, and that'll happen potentially later in August. Take care, TheoTrade. This is Corey Rosenblum with your Theo Night video for August the 7th, 2018.